Good morning. This is Vince Lanci, and it is 7:59. We're about 30 seconds early. 8 o'clock right now. Good morning. I'll start over. Good morning. This is Vince Lanci, and this is the Gold Fix. We were off yesterday. I hope everyone enjoyed the holiday. Um, why don't we get right to it? Basically, the headlines are gold is bouncing, silver is hovering, and the dollar is stronger versus most currencies today, with an exception being the yen. We'll come to that in the broadcast. Gold is stronger today, up about, as you can see on your screen, uh, up about $3. Let's get that back up there. Up about $3 at spot price as well as February price from yesterday's Globex settlement. Markets were open as gold is an international commodity, uh, just not U.S. based during the regular trading hours. Yesterday was a light volume day on account of the holiday. The market broke down on Friday, as discussed here, and we'll review that in a second, from a VBS 4 to 24-hour signal. That's represented by the ovals on the screen. We'll recap that and how that worked and how to look for one of those again. We may have one coming up in another market today, but not in gold. All right, silver is hovering just below what has been an important 1530 level going back over a year. And we've discussed that in this space when we were doing these reports by writing only in July. And we actually still have the little rectangle on the silver chart. So I'm going to be spending some time on silver today, explaining why 1530 in spot is an important area. And it remains an important area. We'll call that a tale of two silvers. In the broader markets, FX markets, the US dollar is firmer versus most currencies, with the exception being the yen. We'll come to that in a second. And by I say firmer both versus most currencies, I refer to both major and emerging markets. Uh, Global stocks are generally softer, and the dollar is firmer, as I just said, against the board, against everything but the yen. Today's action can be attributed thus far to be seen as a result of the IMF revising global GDP figures lower. So I think you're seeing a risk off so far today, and pending any more news, lacking any more volatile or extreme news, the market is reacting to that. Global economic slowdown being priced into a market on a day with light news would give you a stronger dollar. It would give you lower global stocks and not necessarily higher gold, especially if you have a stronger dollar, broadly speaking. And we'll come to opinions on why gold is rallying despite a reasonably stronger dollar. It's very mild, but it's trading 96.40 in DXY. Trade talks are nowhere despite the optimism coming out of the White House last week. Uh, prior to Lighthizer showing our hand is basically four-to a flush or a busted flush, Trump was optimistic, and I think the expectation management there, the effect of rhetoric coming out of the White House is being more and more, or I should say less and less effective. Um, Active traders, we want to focus on a couple things. We'll be giving you levels on that in a second. We think that the shutdown, where we are in the shutdown, is actually something worth mentioning. And basically, some of the things I think people will be focusing on today, outside of our gold world, is Trump made another offer to end the shutdown. And if you have been following his correspondence on Twitter, you'll see that he's been focused on that, uh, uh, placing blame with them for not accepting him and tying it to the wall, etc. But the Democrats will almost likely reject Trump's latest offer to end the shutdown. I'm not sure what the details of that offer are. I am sure of them. I just don't want to spend too much time with it. There's another Brexit referendum possibility, which, if you don't understand what that means or you're tired of hearing about it, here's how it goes. Brexit, in a nutshell, has three broadly ways that can happen. One, there can be a hard Brexit, which means on March 29th, no special deals or cutouts or transitions are made to make it easier on both economies, and it just happens. The gate goes down and the machines are turned off. There's a deal Brexit, which the most recent deal was rejected at the UK level for Theresa May, and that deal uh, would preserve some things and make it less jarring of an effect. And then there's the third is, and this is a rising possibility now of a second referendum. Now, those of you not familiar with parliamentary or referendum type politics, basically the vote to uh, secede or end the partnership with the EU, the Brexit vote in 2016 was a referendum. Basically, it's a vote directly to the people, and the people voted for it. Now, 2 years later, the possibility of a second referendum, which is decidedly less pro Brexit, at least that's what the pollsters are saying again, is coming out. And I think uh, to a person like myself, a member of the United States democracy, which is a Republican democracy, and even understanding referendum politics, uh, it can easily be called a second bite at the apple. We'll keep voting until we get it right. But the reasons for it are being cited as we're not even sure if we want this anymore. So uh, I think just keep your eye out for a second referendum, and I'm not sure what that does uh, to the uh, to the potential Brexit deal. I'm not sure how that vote will come out. I won't opine on that, but I will say it's not really cool to change votes to have another vote just because you like the outcome. Suck it up and move forward. And I'm not saying that from an ivory tower. That's it. The World Economic Forum is kicking off as well. Davos begins. That's the World Economic Forum. If you're not familiar with Davos, it's basically where a lot of hedge fund managers and world leaders get together and either publicly or privately discuss their opinions on the market. There will be a live blog on that somewhere on the market. If we find that, we'll put that up on the Opportunistic Trader. Okay, it's a quiet day in economic data. There is existing home sales numbers for December. That's the only major indicator. Starts at 10 a.m. And then there's some blue chip earnings. Johnson Johnson, IBM are two of them among that. But getting to gold and silver. All right, I want to talk quickly. All right, as a background. All right, you're looking at gold on a 4-hour chart there, and on Friday, I should say, as opposed to Monday, on we pointed this out on the chart, and I should put the Bollinger Bands out there so you can see what I'm talking about. We noted that we were below several weak lines that I've drawn, but they actually coincide with some of Michael Moore's technical analysis. And I noted on the 4-hour chart that we are ready for a move, an impulsive move lower or higher. We weren't sure. The long wicks below maybe think higher, but the action and the signal went off when the market closed here. I did not trade. I was on the road. I was off the desk dealing with family matters. So in the spot market, closing at 1285, you would have shorted this market with a 1288.60, which is a number that I remember saying before as your stop out. It never would have touched it. You would have held it for 4, 8, 12, 16, 20, 24. You would have held it in this area, maybe trailed your stop down along the line, maybe not. And you would have gotten out somewhere in this area here. I'm not saying you would have bought the lows, but I am saying you would have captured well over 2 to 1 for this trade. You should have been me, but I was preoccupied. And this is not a black box system. Now we've rejected that area and we're coming back up. Pure technicians, remove the Bollinger Band so you can see that. We'll look at this 4-hour chart and say, okay, rally, range, sideways, lower. This could be on the 4-hour chart a bear flag, as it's starting to look right now. On the daily chart, if you look at that, on the daily chart, we do have, and I've talked about this before, we did have what I call the strong hands to weekends set up there. My scaling is not so good, but you see I still have a stop level above to tell me that we're breaking. But we had a channel here, and this was during the consolidation phase at the top of a move. And I've said before, these are strong hands to weekends. We don't know who the strong hands are. We don't know who the weekends are. But in the past, it has been that the strong hands to weekends are the strong longs are selling to weaker longs, momentum based, and the strong short, the weak shorts are covering, and strong shorts like commercials are getting in. And if this bar is any indication, we are now below that. As a technician, you would look at this and say, okay, we're below this channel. And you may have other reasons to be bearish, but we're below this channel. That in and of itself is bearish. As long as we remain below it, you can remain bearish. But the point of the analysis was to say, this is strong hands to weak hands. And it's not a technical comment to say that. It's basically, I see who's buying and I see who's selling, broadly speaking. And the way that the orders are coming in and who's doing the orders tells me that, deeper pockets were getting short and shallower pockets were getting long. And thus far, the initial reaction is lower. So the question is, do we bounce back up into this range? I don't think we do. If we do, I think we bounce through it. Or do we stay below and now we start working lower? I think lower. But again, I'm not married to it. On the Bollinger Bands for the daily, let's call it the VBS system, we are in the beginning of a narrowing from a wider level after a trend. And if you would look at the Bollinger Bands as volatility, that's them exhaling. This is the volatility taking a break and inhaling, and then we'll either have a continuation or a rejection in another impulsive move. That's not on the radar, but I should give you the numbers anyway. The numbers today, again, there's three criteria. None of them are met yet. But if you want to take a flyer, above 1295, be friendly. Below 1273, do not be friendly. That's how I would look at it, but I do not have an indicator on that yet. I do want to give you levels for today in gold before moving on to silver. The hourly market in gold does not have anything on the radar today. If it does, if you look at it from an hourly basis, it does look like it's sell-off, hourly rally, pullback. It could be a rally. It's really hard to say, but on an hourly basis, this could be a beginning of a bull flag. I am not a big believer in bull flag trades on the hourly, especially when I think the bigger trend is lower. But that's just a matter of preference. We have nothing setting up on the VBS. If you want to play it as regression to the mean model, although I do not have even a signal on that, which I have had in the past. We're testing that now. You may know, but below 1283 and a half basis spot on an hourly close basis is not friendly to the market. That said, again, I don't have a lot of confidence in that right now, but I do want to talk about the technicals. And you may remember the previous day, I had numbers of 1284 and 1292, not 1284, 1288 and 1292, upwardly sloping. And those one was an upwardly sloping line, one was a down. Oh, there it is. One was 1294 and 1288. Those were the numbers. And actually, 1288, I was very happy, even though I did not trade it. I was on the road. That if it got below 1288, it also coincided with the Bollinger Band signal, and that made me comfortable playing that. But this is an upwardly sloping line. That's a downwardly sloping line. And now, if you fast forward to today, those numbers have basically intersected. So call it a triangle that's closed. Now we're trading in this area between 1288 and 1285. You'll see the little red connector I have there. I have that as a dead area, but they are support resistance numbers if you're short-term trading. 1282 spot 60 was the Globex, the COMEX, CME, whatever, the old floor settlement time. Support 1276. That's a number that I had on the VBS. That's in blue. 1284, 1285. That's a number. We are basically hovering, I would say, right below a dead zone between 1285 and 1292. That's a pretty wide dead zone, but it's a dead zone nonetheless. So if you're bearish, I would say look to get short here with a stop at 1288. If you're bullish, I would say get long above 1288 or get long above 1285. Get lightly long above 1285 with a stop out that you're comfortable with. I don't have a stop out level, but get long above 1285 with 1292 as an area to get out. Now, I think the highlight of the report today from More Analytics is if we roll over the highlighted area, the words, if you roll over to take out 1276, 1274.70, so let's call it 1275. All right, I'm not diminishing this precision and accuracy of his numbers. I am saying that for our conversations, I'm going to say 1275, 1276. If we will likely test lower possible exhaustion areas at 1270 and a half, 1268 and a half, 1268 spot 40, uh, and 1261.90. So let's just say this: below 1276, 1275, 1270 is on the map, 1269 is on the map, and then below that 1262. Now, on my chart, I don't really have much in the 1270 area now. I had 1276 before on Bollinger Bands on the VBS system, but I do have 1276 as an area. Now, one final thing on gold before we move to silver, and I think we have to look at the macro for a second here, because it is, I think, very important as we come upon an area that is key to a continuation of the market moving higher potentially. This is, I call this the holy grail. This is a 12-month moving average as imposed on a monthly chart. Ignore that yellow line there, just the way it renders. When the market settles below the 12-month, the market gives an average rate of return of 3% every month thereafter. When the market settles above. When the market settles below, you lose an average of 1.5% if you're long. So you should just be short below that on a settlement. Now, last month we settled above it. Those are the numbers. That's the facts. What I'm saying. I've given this before in several reports. Last month we settled above it, which is a signal to get long. Now, we've done some further refining of this 12-month moving average, and the rate of return uh, swings upward even more and is more predictable when you buy gold when it settles on a monthly basis above moving average, but not until the slope turns upward. And believe me, when the slope turns upward, you could find yourself $50 above this. I understand that. But on those rare moments, when the market, like here's an example, it turns upward, it's too late. But if you're playing a little cutesy game here, there are rare moments where uh, going back, geez, 2000 and 2000 and well, it's actually not been properly tested, but it kind of goes like this. We settled above, and then it upwardly slopes, and you would get long, and then it slowed downwardly slopes, and you're out. We settled above, you missed the upwardly slope, okay? But the point is that passing through a downwardly sloping line, yes, you should be long, and your level should be, simply put, 1265.70 on a monthly basis. I'm not going to say 1260 spot 57. I'm going to say the previous number, 1265.70, because that would just confirm the slope going lower. So if we get below 1265 and it's the end of the month, be very careful if you're playing a macro long position and consider getting short. So our bias on the macro is long, but uh, we're forming a nasty looking monthly doji candle, and we are lower. We're off the highs of that month. So uh, the trade range would be 1285, which I just mentioned. You can get long above it, you can get short below it. It's up to you. But I don't have a signal. Everything is the easy money is made on our trade. And let me get some of these things off of here. The easy money is made on this trade. And now we're looking at basically a system that's saying do nothing or trade the range. So below 1285, you can be short right here with a 1288 stop. Above, if the market gets down to 1276, which is this area, this low here, consider buying. And it seems very natural and organic because we did make a level in that low in that area. Below 1276 area, I get a little bit nervous, and I look for the 1260s. Below 1265 on a monthly settlement scares me, which would mean a print of about 1260 on a daily market would really tell me this could be over. So your takeaway for gold is this: below 1285, I'm not friendly. Above 1276, I am friendly. So I have nothing to give you as definite numbers to trade today. But if you are a range trader, because my system is not a range system, this might be a good day for you. a short with 1288 stop. For the third time I've said it, might not be a bad idea. And keeping your powder dry, waiting for a level that drops below 1280 but above 1276 as a place to nibble for a rally. That might not be a bad idea. Above 1285, between 1285 and 1288, I call that a dead zone. Above 1288, we could rally to 1292 and higher. But see this area here, 1292? I think 1292 is a resistance that should not be ignored because it comes in on my system in addition to being a technical number. So if you're going to get long above 1285 and we get to 1292, you'd be wise to either raise your stop or get out. I want to go to silver now, and I do love silver as a tradable product. It's just not something that's easy to give reliable numbers to. It's definitely a high maintenance product. Before there were pot stocks, before there was Bitcoin, there was silver, and even though natural gas is the widowmaker, uh, and I'm not afraid to say that. Uh, uh, Even though I'm not a girl, uh, it has hurt me more than once. Right? I want to go to a weekly chart because this is how long ago this number came in. That was important. All right, we can get rid of this, and we can put. There is a little. There it is. There is a little rectangle. See that rectangle right there? This is a weekly chart. I was drawing this on the daily because back in July when we started these broadcasts or started the written version of them, I wrote a report saying that 1230 area was a very important physical demand level. Why? Not because I made it up, because I saw physical buying at that level, believe it or not, coming out of Asia. So now it may not look like we spent a long time there, but when I back this up and give you more perspective, you'll see how important it is. If you want to call silver, there's a tale of three silvers. We'll just say that here's a tale of two silvers. Below 1530 in this time frame is bearish. Above 1530 is neutral. All right. So we held 1530 for 1, 2, 3, 4 weeks. There was definite buying in this area. I know this from physical players. And then, boom, it was over. So now we are, and we rallied up to it and paused. And then we went above it, and now we're testing it again. So if you're bullish in silver and you want to play from the long side and it's not an active trading situation, you can be friendly to the market buying this pullback if you think we're going to continue higher, and know that 1530 area is in the spot market an important area. When I say 1530, if I'm a physical buyer at 1530, that doesn't mean that I'm buying at 1530 spot 00. It means I'm looking at the market. I'm a physical buyer. I have physical demand orders. I'm going to buy at 1525. I can play around with it. I have discretion. These are not robots, these type of buyers. These are real orders with people acting and playing poker. Now, if you want to be bearish, you know what? If you want to be bearish, it's really not a bad place to say I'm going to be short here with a stop out of new highs on a weekly basis, maybe last week, because that would break that would confirm the bull flag. Uh, I don't have a problem with someone saying I'm short here with 1569 or 1570 as a stop. If you want to risk 30 cents, you can make $1 to $1.50. But this is like a 1 week to 3 month trade. On the shorter time frame, uh, I don't want to trade silver in this time frame at this price on a shorter time frame. But I want to show you that rectangle again on a monthly basis. A little tiny rectangle is only a little tiny rectangle, and it's actually, where is it? It's like, I don't mean to go this far back. Let me stretch this out a little bit so we can see a little bit more. There's the rectangle. All right. I want you to look at this rectangle. A little too far, but I want you to see how important, although it's a tiny rectangle, is what it represents in an area. You've heard me say many times, gold hates the teens. I don't think silver really likes hanging out at 1530 too much. All right. Above 1530, remember I have 1530 there. Above 1530, right? It's not exact science, okay? Above 1530, see these long wicks? This is someone selling in the 1530. Above 1530, physical demand returns, bull market gets in the 1530 area, penetrates, doesn't settle below 1530, stays above 1530, holds at 1530, below it, flat lines above it. So if you look at this market, it's coming off, right? And 1530 holds several times, and you have below it, you have a nice little, it's almost like you have it. This area here and this area here, call them channels where there's no demand, physical demand at until it's a 1400 area. And this area here, you can call this a channel where there is supply and demand between 1530 and say $17. Actually, you should be looking at this area here. Between 1530 and $17, there's supply and demand. And above $19, there's nothing but supply, at least over the last several months. So, looking at this from a daily perspective, if you are looking to trade silver with that 1530 number in mind, uh, let's see if we have anything on the Bollinger Bands, which is the VBS. On a daily, we're just starting to tighten, which is good because it's paralleling gold. On the 4 hour, silver's doing what gold did. We have nothing there to tell you except that a downward move just happened and it's done. On the hourly, we have similar formation to gold. So I'm just saying this. I actually may have said it, or I definitely thought it. I said safe to be long silver above 1530. I remember saying that to myself when I was trading 1565, but I didn't think we'd get to 1530 that quickly. But we did. So now we're at 1530. So make a decision. Do you want to be long or short here? If you want to be long, you want to be careful right now. If you want to be short, you could stop yourself out naturally on new highs. If you want to be long, maybe stop yourself out on new lows for the week. It wouldn't be a horrible idea to say I'm long at 1530 with a 1515 stop level. It is 8:26. I'm going to wrap it up, but let's just go through the markets. Okay, the Dow is slightly lower. The dollar is slightly stronger, and I did mention the yen. The yen is the only currency stronger against the dollar today, and that is largely because we mentioned this last week that uh, inflationary signals were backing off in Japan, which would give possible strength to the currency, and so the yen is bucking the trend a little bit today. We know we are Brexit. Brexit is basically limbo. The currency markets are pretty much as I described. Let's take a quick look at the stock markets and, and commodities. All right, the 10 years a little bit stronger, which is as in the yield is lower. That's consistent with a little bit of a risk off mentality. So we have a market that is across the board pricing in a risk off, and I think that that's a combination of the chronic abuse of a shutdown by both sides, the incessant bait and switch on trade talks. I think there's a lack of confidence in that. QT is going to continue to happen as long as economic numbers are strong. And finally, today's reason, which is like, piling on the dog piling on the rabbit. Those of you who know Bugs Bunny, dog piling on is basically the IMF lowering expectations. So we're going to be pretty much on the sidelines today. We don't prefer to trade ranges, but if we did, we'd be selling it here with 1288 in gold as a stop level, or we would be buying it on a dip to 1276, provided it happened early in the day. If it happened late in the day, I'd be much more reticent to do that and be worried about a macro trade. In fact, we do have a macro gold long. That's not in the chat room. We put that on weeks ago. I do want to bring that up. That's actually important. We're going to be ending right after that. But many weeks ago, it seems like almost a year, but on a weekly basis in gold, sorry about all that. We are still talking Fed, by the way, but this is spot and Fed. We gave a bull signal here, and we were long. Stop out was this area here, and we touched it, but frankly, we played fast and loose with it because it's a weekly bar, a weekly close. It didn't close below there. We're biting our nails. We had a hard stop here, and we had a soft stop there. A soft stop here and a hard stop there. Settled above it. We stayed long. We are still long. This is horrible to us, and we should be getting out based on the macro exhaustion of the VBS, but we are still long there. So if we trade the range today and say get short below 1285, um, then that's because really what we're doing is we're dovetailing into getting out of a macro position. Hope you understand that macro and micro matter. as long as you're not lying to yourself. So macro longs, I would say probably should be looking for a top this week, and possible retracement lower could be healthy. Micro players, active traders, be short here if you like. I think we could drop as low as 1276 in a heartbeat. Uh, so that's it. Have a great day. 8:30. Got to go.